Most professionals and certainly most retail investors don't have a concept, the real heart of it. We're only just starting to see now what has been festering for a lot of years. And anybody that thinks that it's just going to be one comment from a premier or a president and we return back to normal, I think is going to be sadly mistaken.
You're watching Silver News Daily. Subscribe for more.
Something is happening in the silver market that almost no one's prepared for. While all eyes are locked on gold soaring past $3,000, silver has quietly set the stage for a move so violent, so historic, it could flip the entire precious metals narrative upside down. Peter Grandich just issued one of the most explosive calls of his career, urging investors to dump gold and load up on silver, because according to him, the numbers don't lie. The gold-to-silver ratio has surged to 100-to-1, a level so extreme it's only ever appeared at major inflection points. And every time it does, silver doesn't just rally, it detonates. This isn't just another market cycle. This is a flashing red siren, a setup that's only been seen a handful of times in history. And each time, silver delivered gains that left gold in the dust. Grandich says the breakout is already underway, and those who wait will be chasing, not leading. So, why is this ratio so critical? What's building behind the scenes? And why is 2025 shaping up to be the year silver finally breaks free? Stick around, because once you understand what's really going on here, you'll see why Peter Grandich isn't just making a prediction. He's issuing a warning.
First, and I want to get to silver because you'd be surprised. Well, you might not because you read my stuff, but something that I did with silver that I haven't done in quite some time. So I think it's important to take a step back. The Secretary Treasurer said this before all this tariff stuff started. He made a very good point. He said that the top 10% of wealthy people in the United States own 86% of the assets, stocks, bonds. The next 40% own 14%, and half of America owns nothing. They're just indebted. So really what we need to be really looking at is what is that top 10% doing? Because that's who's going to influence what prices do and so forth and so on. What's most interesting, something that I never believed we would see, which we saw more than once already this week, and I will get to silver. We saw stocks down, bonds down, and the dollar down all at the same time. I don't ever remember seeing that in major moves when there was a major move in one of those markets. And only one thing went up, gold. So anybody that wants to tell me, and all the anti-gold people and this, that's your answer. What gold has replaced the bond market and to some extent the dollar as the place to go for safety, which we've argued for years was the thing to do when you could have bought that insurance for a lot less money. And so to answer your other part, earlier this week, I first came to the conclusion that those who have said silver is manipulated, I absolutely agree with them. In fact, I painted a tinfoil hat on my head and put it out as a picture. Now, most people, including know that this is what mostly has come out of Grandich's mouth for decades when he was asked about silver. Silver is like kissing your sister. And my argument always was, you want to own gold first. But you're absolutely right now. The spread between it, and I've never been a big believer in the ratio because there's no set rule for that. That's just looking at the prices over years and years to be extremes. But like you said, other than one other time in the modern era, it hasn't been at this level. And what I think is going to happen, what I think doesn't mean it's going to happen, is there's going to be a quick profit taking in gold. It may come from $500 higher, which could be just a week from now. But we're going to have a very sharp down. And I think next week we're vulnerable because of the thinness of trading as we get closer to the three most important days for a lot of us like you and me that will take place during Holy Week. But I also think what will happen is more retail people now will be looking at the metals, and the more the retail is involved, the more likely they'll choose silver versus gold, especially in the discrepancy of the price now. So when silver broke down the other night and was trading between 28 and 29, I shocked. I mean, long-term clients wrote back, said, me an email. Peter, you sure this is true? This is not some artificial intelligence thing that somebody has created for you to actually say you're bullish on silver? But I really think going forward, if you take the price today when we're speaking and the price of gold, I think silver could outperform gold for the rest of the year. I think they're both going to end up higher than where they are now, but I think silver may actually go up more percentage-wise. Part of that is simply because it hasn't performed up until now. It's not the monetary asset like gold is, but I do think it will be, because it's been a cousin of gold, it'll get some of the interest that might have otherwise went into gold, but now those people think gold is just too highly priced for them to be involved with it.
The gold to silver ratio isn't just a quirky number. It's one of the most powerful signals in all of precious metals investing. Right now, that ratio sits at a jaw-dropping 100 to 1, meaning it takes 100 ounces of silver to equal the value of a single ounce of gold. To put that into perspective, the historical average hovers around 50 to 1. And every time the ratio has spiked to these kinds of extremes, silver has responded with violent upward moves. Look back at 2003, 2008, even 2020. Each time the ratio surged past 90, it was followed by silver rallies of 100%, 200%, even 400% in just a matter of months. It's a classic mean reversion trade. And right now, silver is more undervalued relative to gold than almost any other time in the modern era. But this isn't just about technical history, it's about raw imbalance. Peter Grandich says, we are looking at a once-in-a-generation divergence, one that screams opportunity. While gold has surged on fear and central bank buying, silver has lagged behind, weighed down by a cocktail of investor apathy and economic headwinds. But that's precisely the setup silver bulls wait for. Because when silver finally starts to catch up, it doesn't climb slowly, it slingshots. And with this kind of gap in the ratio, the slingshot could be bigger than anything we've seen before.
My view is this. The next 10%, which can happen now in a matter of hours, it's no longer weeks and months and years that it used to be, will all be based on what comments are made from what side or what have you. But what I think is really critical for people to look at here, how did most people, probably not your clients, I'm singing to the choir here, and I'm not singing because it's you, I'm just stating fact, but how did most investors miss the best investment over the last 25 years? That's been gold. And even if you look at when I said in 2021, when I decided and I shared with my followers and clients, hey, I just think if you want capital appreciation, it's not going to be found in stocks and bonds. It's going to be in gold. Forget all the other reasons, just that it's going to be able to make more money than stocks and bonds. How did 97 or 98 or 99% of financial advisors who have really no exposure or so little exposure to it, how did they miss that? Why did they miss it? And why aren't their clients saying to them, why did gold go to 3,200? How come I don't have any part of it all? Because gold has proven once again, for what you and your father and people like you, other companies that do what you do, have been saying for decades, it's the only true storer of value and protection when all hell breaks loose that brings the safety and peace of mind. And that's what you could take a run around the bases for how young you are. But I know for these years that you've been in it, that's what you try to share with people. And yet, even now, despite all of that, it's still laughed at and frowned upon. It still gets 30 seconds on the financial network because one guy happens to be half bullish on it. It's just an amazing phenomenon. And you would think that your office or whatever would be overrun by people now, given what they've seen, what's transpired. And yet, most people are just hoping that they can get back in stocks and bonds and still aren't considering gold as at least what we've always said it is the insurance that you hope never have to be called upon to be used.
Silver isn't just a hedge against monetary chaos. It's the industrial lifeblood of the 21st century. And right now, its demand is exploding beneath the surface. While most investors are still stuck thinking of silver as gold's poor cousin, the reality is this metal is quietly becoming indispensable to the global economy. The Silver Institute expects industrial demand to smash records this year, crossing 700 million ounces for the first time in history. Why? Because silver is woven into the fabric of every emerging technology that matters. Solar panels can't function without it. Electric vehicles rely on it for conductivity, circuitry, and battery integration. Even the rise of artificial intelligence is boosting silver demand, as the high-speed computing infrastructure behind AI systems depends on silver's unmatched electrical properties. And this isn't some future trend. It's already happening. Global photovoltaic installations are on track to hit another all-time high, and automakers are ramping up EV production despite supply chain setbacks and political turbulence. Meanwhile, AI development is surging forward, quietly driving up silver consumption through the tech sector. This isn't cyclical, it's structural. Demand is being locked in for years to come, and the silver market simply wasn't built for this kind of sustained pressure. And here's the kicker. This industrial boom isn't even being priced in yet. Silver is still trading like a niche investment asset, not the industrial juggernaut it's become. Grandich isn't just betting on a bounce. He's pointing to a full-blown demand revolution, and it's already in motion.
It also goes to show you that how really it wasn't as secure as it was in the happier times that people told you. Because if everything was half as good as the don't worry, be happy crowd has led people to believe for years, there wouldn't be all this anxiety and fluctuation. The problem is that on a couple of nights ago, while we were sleeping, at least most of us were sleeping, the world started to implode in the credit market. And that was one of the reasons that led, I think, Trump to kind of cave somewhat on his original plans and thinking. And we're still not out of the woods on that by any means at all. But it's just this combination of just for years of neglect, from robbing Peter to pay Paul, for believing that more things equal more happiness. You and I get into this. We talk about our faith and all the errors, all the biblical teachings have demonstrated that if you didn't listen to the biblical teachings, you would end up on what we're now seeing now. So it's somewhat frustrating because you're like a lone voice. Not that there aren't other people that have been bearish, but in my industry, in the planning and all, there's very few people that openly wear their faith on their sleeve in their work. And this is understood. If you understand biblical teachings and teachings of the church, this is not hard to come by, to see that we're in this kind of position and all. And what infuriates me, just so you know, and this will probably cause some Musk person to look me up and bomb my car now, but here's a man, he's the richest man in the world. He doesn't need any of this. He could go sit on islands, do whatever he wants. And he decides to go and try to save, which has now become his country, by looking at it from skills that he has financially. And he finds just tremendous thievery, and half the people want to kill him. So it says to me that whatever happens in the future, it's almost like we almost, I don't say deserve it, but we had it coming to us because we have it staring right in our face now. And that is not the biggest thing that we should all be up in arms, no matter what side of the aisle you're on.
Gold may be shining bright right now, but Peter Grandich is sounding the alarm because while everyone's piling into the yellow metal, they're missing the real opportunity flashing in silver. For the last 2 years, gold has surged thanks to global fear, rising inflation, sovereign debt concerns, and now the looming threat of a second Trump-era tariff war. Central banks have been loading up, investors are scrambling for safety, and the headlines are dominated by record-breaking gold prices. But here's the problem. The gold trade is crowded. Grandich believes gold has already had its run, and the smart money is beginning to rotate. The reason? Silver has been left behind. While gold soared past $3,000, silver hasn't even broken its 2011 high. And that's exactly why Grandich is making the call to swap gold for silver before the real move starts. Because silver isn't just a fear hedge, it's a high-octane play with real utility. It thrives in the same environments that benefit gold, but with far more upside when the tide turns. The fear premium baked into gold can only go so far. Once that anxiety fades or stabilizes, gold consolidates. But silver? silver ignites, especially when that shift comes at a time of rising industrial demand, worsening supply deficits, and a historic 100-to-1 ratio imbalance. Grandich sees gold as fully valued, maybe even overbought. But silver? Silver's still asleep, and that's what makes it so dangerous, because once the market wakes up, the move won't be slow, it'll be explosive.
Well, but I'll tell you what even more is concerning to me, quite frankly. I always speak the truth with you. Nothing should be any different this time. Yeah, the tariff thing is real critical in the world and manufacturing. But we had this guy come in who happens to be the richest man in the world, just spends a couple months looking at the books of the United States, and he basically showed us that they're cooked, and they've been cooked forever by both sides of the aisle, and it's probably trillions of dollars, and half the people are mad at the guy that he did this, and that they're going to try to destroy his business and hurt any assets that he had, cars that are made by him and all. That's why I talk about that people still have not come to a grasp of the sins. I've said for quite a while that America entered its worst ever economic, social, and political era. And this is just further proof that somebody comes in and instead of people going, he's right. How did all these senators and Congress people on both sides of the aisle go in with nothing and leave or still there and have tens, if not hundreds of millions of dollars worth? That should be the story that's bigger than tariffs. And it's all part of what I also believe happens on Wall Street is what I've always coined, it's called the don't worry, be happy crowd. That the cup is always half full. You can toss, I'm absolutely convinced of this. Most advisors could be tossed off the Empire State Building and all the way down. They'll all say the same thing. Hey, so far, so good. It's just the attitude that's what helped us get to this point here. No one's kicking, instead of blaming Trump. Some people are mad at Trump. Some people blaming the Chinese and all. How about the fact that we as a country allowed our destiny to be put in other people's hands financially? All the indebtedness we had to be financed by outside sources. Manufacturing. This didn't just happen yesterday. The Chinese haven't just been doing this for the last year. They've been doing it for decades with our consent. Glad, because big corporate America could go over there, pay very cheap for labor, make the big profits, and pay their CEOs $500 million a year in salaries and all. No one wants to talk about that part. And also, so I think that no matter what happens, and I do think, and I don't want to take away from where you may be going, Elijah and Few, I do think next week will be used as an excuse week because it's a thinly traded week, especially by Wednesday or Thursday. But I don't think we've seen the end of this. And I think this picture is going to become even more volatile as the weeks and months ahead come about.
Silver is staring down its fifth consecutive annual supply deficit. And this time, the gap is too big to ignore. The Silver Institute projects a shortfall of 149 million ounces in 2025 alone. That's not just a dip, that's a structural failure in the supply chain. And here's the twist. Even with higher prices, production just isn't keeping up. Silver mine output is expected to rise slightly, hitting a 7-year high at 844 million ounces. But that's nowhere near enough to cover industrial demand, which has ballooned past 700 million ounces and continues to climb. Yes, recycling is ticking up, expected to breach 200 million ounces this year, but most of that comes from industrial scrap, not investor sales. And let's be clear, silver recycling is not a silver bullet. The bulk of supply still relies on mining, and the mining sector is facing its own set of bottlenecks. Output from base metal mines is stagnating, constrained by low lead zinc prices and delayed project ramp-ups. Even the expansions we do see, like Hecla's Keno Hill or Aya's Zgounder in Morocco, are drops in the ocean compared to the wave of demand surging through the system. This is why Grandich is so adamant. A multi-year deficit isn't just a red flag, it's a time bomb. Every year that silver demand outpaces supply, the tension builds. And when that pressure finally releases, the price won't just rise, it will reprice entirely. This isn't about a quick trade, it's about a fundamental reset in how the market values silver. Grandich sees it as inevitable. And if history is any guide, that repricing will be brutal, fast, and impossible to chase once it begins.
The complacency still on both sides of the coin, the bulls and bears and the markets, is amazing. $100 update in gold, that used to be a dream. And, we had it, and then we didn't get it yesterday. It was only up 80 something. There were people actually disappointed. It's like, and then I see the same on the other side. I see credit markets imploding and people going, yeah, that doesn't really matter. It's stock market matters. And I say the stock market is so small compared to the credit market. It's part of the overall picture, which has kept me so defensive and bearish this last few years, because I still don't think most professionals and certainly most retail investors don't have a concept, the real heart of it. We're only just starting to see now what has been festering for a lot of years. And anybody that thinks that it's just going to be one comment from a premier or a president and we return back to normal, I think is going to be sadly mistaken.
Behind the scenes of silver's stagnating price lies a quiet war. A war being fought in futures markets, warehouses, and institutional vaults. For years, big players have used paper contracts to suppress silver's price, building a massive short position that keeps the lid on rallies. But that lid is starting to buckle. According to Peter Grandich, the fuse has already been lit on what could become a historic short squeeze, and the signs are everywhere. CME warehouse inventories are seeing unusual deliveries. Tactical short covering is accelerating, and traders are quietly repositioning as fears mount over Trump's tariff threats and the broader instability of the global economy. These are not random jitters, and these are pre-quake tremors. When short sellers start covering, not because they want to, but because they have to, the results can be explosive. That's exactly what we're seeing unfold. The problem is simple. The volume of paper silver in the market vastly outstrips the available physical supply. Some estimates place the ratio of paper to physical silver as high as 200 to 1 in some markets. That's an illusion of abundance. When even a small percentage of traders demand physical delivery, the entire game collapses. That's what a squeeze looks like, and it's why Grandich is calling this moment a ticking time bomb. The market has been lulled into complacency by years of manipulated calm. But calm never lasts. And when the cracks in this paper pyramid widen, the scramble for real ounces will begin. And the price of silver won't just reflect value, it'll reflect panic.
First of all, we will see trading start to dry up after Wednesday. For me and my wife, our plan is that once Thursday's trading stops, once we go to Thursday night mass through Easter Sunday, that'll be our only focus. That and coming home prayer business will not partake. I think it's an important time. The prayer and hope is that people, because more and more of the world is moving away from our faith, not just from the Catholic perspective, but just Christianity in general, and more people seem to be agnostic or outright atheists. I think to understand what transpired in a week, if you think about, they say in our business, Elijah, you're only good as your last call or your forecast. Well, look at poor Jesus. Came in on a donkey Sunday, they were laying palms down, and by Friday they gave him the most horrific way to be murdered that was ever created by mankind. And he was God. So maybe we shouldn't kill ourselves when people send us nasty emails and all, because look what they did to Jesus. But I think it's very, very important, even if you've only been, a C&E Catholic, Christmas and Easter, to try to understand what these days are about. I will put out videos on my own blog and post them on my X page as well that will explain each day and what the meaning is behind it. I think it's very, very important to understand what transacted through that period of time, especially when God himself got on his knees and washed other people's feet. And even in the last moments during the most cruelest pain, he turned to his Father and said, forgive them because they know not what they do. I mean, if you just think about it, it's either, I know some people don't believe, I understand that, but it's still a better way to live, the way that we will be focused on. And then, of course, Easter, to understand that the resurrection, that it's not all this, that, if it was just this, it would really stink. and the hope and faith of an eternal life, and an eternal life that'll be a zillion times better than anything that anybody can experience here, even the richest man in the world. I think that's a lot to look forward to. And hopefully whoever's listening to this, if you've fallen away from this or you never really looked at it, good time to just to try to understand it and to appreciate it. And maybe at this point in time, just say, you know what, even if I don't know for certain, why don't I just go and sit during a service and all and try to see, I'll ask God, if you're there, try to speak to me. Boy, he loves it when they open that little crack, which I've heard this story so many times, just give him that little space. And I think a lot of people will see their lives change.
As silver's fundamentals tighten like a vice, the broader macro landscape is adding gasoline to the fire. The world isn't drifting toward uncertainty. It's hurtling straight into it. In early 2025, President Trump's tariff plans reemerged as a market shock, triggering a chain reaction through commodities, currencies, and investor sentiment. A proposed 25% auto tariff set off a gold surge and rattled global markets. But beneath that, something deeper was happening in silver. Deliveries into CME warehouses spiked. Futures positioning flipped almost overnight. And suddenly, silver began climbing alongside gold, not as a follower, but as a co-leader in the safe haven race. Why? Because we're not just dealing with tariffs. We're dealing with the risk of stagflation. Inflation remains sticky. Real interest rates are barely holding above water. And U.S. debt levels are pushing into record-breaking territory. Investors are desperate to diversify away from traditional instruments. Bonds are volatile. Equities are overstretched. And fiat currencies are under siege from both policy and politics. This is where silver shines, not just as a hedge, but as a hard asset with dual appeal. It offers monetary protection like gold, but also industrial relevance in a changing economy. And that combination is rare. Grandich knows that in times of macro instability, silver doesn't need to catch the spotlight. It just needs to be seen. And that's exactly what's happening now. The macro storm is shifting sentiment. Fear isn't just driving gold anymore. It's unlocking silver's hidden potential. And once that door is fully opened, there's no shutting it. Right now, the macroeconomic chessboard is moving fast, and silver is positioned to checkmate everything else on the board. What we're seeing isn't just a reaction to Trump's tariff policy. It's a full-scale shift in global investor psychology. The equity markets are floating on hope, but underneath, there's real fear. Fear of ballooning debt, fear of policy paralysis, and fear that central banks are running out of room to maneuver. And when fear takes over, capital doesn't trickle. It stampedes towards safe havens. Peter Grandich has been in the markets long enough to know what that looks like. He sees the signs of rotation already underway. Gold has soaked up much of the early fear capital. But now that it's at all-time highs, investors are looking for the next move. That's where silver steps in, undervalued, underowned, and overlooked. But that's exactly what gives it power. Silver has room to run. It hasn't been bid up to the stratosphere. Not yet. And that makes it the perfect vehicle for a market that's running out of options. And let's be honest, this isn't just about economics. It's about perception. When a market believes something is undervalued, it acts. And with industrial demand rising, supply tightening, and the gold to silver ratio screaming for a reversion, silver looks like a lifeboat in a storm. Grandich isn't chasing headlines. He's reading the tide, and it's turning fast.
Well, gold producers are going to be, if they're not started to already, will be among the most talked about for at least the next several weeks to few months. And here's the reason why. Their free cash flow, which was already at records, it's astounding now with gold at 3,200. And two of the biggest costs to run a gold mine, energy, oil, and labor costs, which certainly people are not going to be in position to seek substantial higher wages, will be flattened down for them. So they're going to print money. And they're going to be printing money at a time when most other sectors and other industries are flattened down in earnings. So I still think the gold producers still have a ways to go. And a barometer, the GDX, is breaking out, And even the GDXJ, which is the lower small to mid-size producers and some advanced stage exploration companies, the last to go, of course, still hasn't, but they're starting to muster through volume and are the real junior, highest risky ones. But I still think that market's ahead of them. And the reason I feel good about that is despite huge sell-offs in the market, even on gold on the particular day that it went down hard, the shares didn't really come down hard, especially the juniors. They're completely washed out. Their trouble to get really going remains not enough of an audience. There's not enough. I continue to argue that industry is a lot smaller than it was 10 or 20 years ago, but their day in the sun is here now. And I'm speaking my own book because that's where a lot of my own personal wealth is. So I always say I have huge biases in that. But I feel rather comfortable now more than ever sleeping at night with those things than I have in the last 3 to 5 years.
Peter Grandich isn't mincing words. He believes silver is about to overtake gold as the premier precious metal of 2025. And while that may sound outrageous on the surface, the case he lays out is nothing short of compelling. Gold has already played its hand, fueled by central bank buying, fear premiums, and a desperate rush for safe haven assets. But silver hasn't even stepped onto the stage yet. That's what makes this moment so pivotal. What Grandich sees is a convergence of forces that rarely align. A 100-to-1 gold-to-silver ratio screaming for mean reversion. A roaring industrial boom powering relentless physical demand. A fifth straight supply deficit, shrinking inventories, and a market still obsessed with gold's spotlight. It's a setup that only comes around once or twice in a generation. And if history is any guide, when silver finally starts to run, it doesn't just follow gold. It surpasses it. This isn't about replacing gold as a store of value. It's about outperforming it as an investment. Every indicator Grandich is watching says the same thing. The market is wildly mispricing silver. And when that disconnect closes, the returns could dwarf anything we've seen in the last decade. It's not just a swap. It's a calculated trade from an overbought asset into an undervalued rocket waiting for ignition. And if Grandich is right, 2025 will be remembered as the year silver didn't just catch up, it took the lead.
You know, that's an individual decision. I would say this. I would say that if you were 80 or 90% gold and only 10 or 20% silver, I would look to be more 50-50 now. So if you are somebody that has a lot of gold but not a lot of silver, yeah, I think that swapping, which is probably music to your ears, but the bottom line is I think it's a worthy thing to do if you're going to have interest in the metals. I certainly, for the first time now, seriously look at it in equal terms. And that's a lot for me to say because I used to get very people upset in the metals community where I could be roaring bullish on gold and not on silver. They couldn't understand why. But I do think it's worthy of that now.
This isn't speculation anymore. It's a full-scale revaluation in the making. All the signs are there. A record-breaking industrial surge, a fifth consecutive supply deficit, mounting geopolitical risk, and a gold-to-silver ratio so extreme it's practically begging for a reversal. Peter Grandich didn't make his call lightly. He's watched this market for decades, and to him, the pieces have never lined up quite like this. Silver isn't just a good trade. It's the most asymmetric opportunity in the entire financial system right now. And here's the reality. Once silver breaks resistance, especially above that crucial $35 level, the price won't walk. It'll run. Institutional money will chase it. Retail investors will flood in. And the era of silver being the forgotten metal will be over. The breakout will be fast, aggressive, and possibly unstoppable. That's why Grandich says the time to swap gold for silver is now, not when the headlines catch up. By then, the move will already be well underway. If you've been sitting on the sidelines waiting for a signal, this is it. The setup is historic, the catalysts are converging, and the opportunity is now. Don't wait for the breakout to confirm what the data already tells us. Get informed, get prepared, and stay ahead of the crowd. And if you found this discussion valuable, make sure to subscribe for more insights into the evolving precious metals market. This is not financial advice. Speak to a professional before making any investment decisions.